Good morning, everybody. Buenos dias. It's good to be here. We're going to start off the day with having a great conversation around climate, catastrophes, and all the unfortunate things that we are all living through. But before I begin, I want to just take a second to thank all our international colleagues who called our department, called our team during the LA wildfires. We want to thank you and tell you that we appreciate every call, we appreciate every offer to assist us, and we really appreciate all the support. And also our heart goes out to everybody right now in Manitoba, Canada, who are suffering through some wildfires. We know there's over 17,000 people who have been evacuated, and we know the smoke is impacting a lot of the states in the Midwest, and so fortunate the reality that we are currently living through. So I'm pleased to be moderating this panel on climate risk and resiliency, and we have some amazing panelists that were already introduced, so we're going to try to save time and get us to some of these questions. So we've seen record-breaking extreme weather events, from floods in Europe, storms in Southeast Asia, wildfires in Australia, Canada, South America, and extreme heat events throughout the world, from India to downtown Los Angeles. These events are often life or death for some communities, and the events strain financial resources across the globe, causing impacts that linger for years afterwards. This panel will focus on areas where we can make progress, specifically increasing resilience efforts by insurers, consumers, and regulators, how various levels of governments are working collaboratively with regulators, consumers, and insurers to deploy new technologies, promote incentives, and facilitate education and maintain protected and resilient communities that we've all been talking throughout the days yesterday, specifically when it comes to how do we build resilient communities. And what more can we do, and what more needs to be done in the climate resiliency landscape to build momentum for resiliency programs and reduce losses over the next years. So we have a fantastic panel here today, including from a variety of backgrounds and perspectives among our panelists. In the interest of time, again, please refer to our forum website to see their wonderful bios. And again, we encourage you to use the Slido opportunity to ask us some questions. And we're going to get to some of these questions. First and foremost, we're going to go with Siham. Ça va bien?
Ça va bien, merci.
Good. Siham, how do you best incentivize proactive risk reduction and risk prevention, especially at the home, neighborhood, community, and regional, and why not, national level, right? Because we talked about how you can do everything in one person's home. That necessarily is not going to make a difference. We need to start looking regionally and nationally now at how we create resilience. So what are your thoughts around that?
So, Ricardo, first of all, I would like to thank you and thank the NAIC for giving me this opportunity to speak today. It's always a pleasure to be here. And to answer your question, at ACAPS, which is the Moroccan Authority for Insurance Supervisors, our mandate goes beyond prudential supervision. We are also committed to fostering fair and transparent market conduct and promoting the development of the insurance sector. So the topic of building a culture of risk prevention and mitigation is an important one for us, and we strongly believe that financial education and a good market conduct are closely linked to move this issue forward. Let's begin by the financial education. You all know that a well-informed consumer who understands the risks they may face is more likely to adopt appropriate and proactive behavior when those risks arise. To this end, we have launched in Morocco several awareness campaigns focusing on specific themes. So the financial education campaign covers a specific type of risk and how to prevent and mitigate them with the insurance sector. So we use types of communication channels, radio, TV, social media, but also field visit to outreach activities with the dedicated targets. So the objective is to inform people and to try also to sensitize them on the risk they may face. So alongside our effort to promote financial literacy, we are placing also a significant emphasis on empowering insurance professionals. This is important because for us, the intermediaries are the first step and the first contact with the population in Morocco. And I think in all over the financial sector, the insurance sector, this is the first step. So let's take one of the example of insurance intermediaries. So they are, as I said, in a unique position. So by investing in their capabilities, we aim to turn them into frontline educators. Right. And this is really important. So that's why we launched a program of e-learning in order to try to explain to them what is the risk that they are facing in order to also help the population to better understand.
Right, that's key. For having the public understand the risk is critical to be able to have them do the actual mitigation, understand why the mitigation is important, right?
Yeah.
I'm going to ask you one more question because I'm going to do, this is since we're the two regulators on the panel, this is we're doing a regulator priority here. But, you know, at NAIC, we often have these really robust discussions around what is the appropriate role of regulators in terms of the appropriate role and definitions around what insurance companies, regulators, and governments should be doing to promote effective risk reduction, risk prevention, and how do we ensure collaboration between stakeholders? You know, some of us think that we should just let the markets decide. Some of us think that we as regulators should be more proactive. I'm curious to get your opinion in terms of how do you see your role as a regulator as we're all now grappling with a changing climate? What do you think our role should be as regulators?
So actually, one of the most effective ways to achieve this, in my opinion, is through a strong public-private partnerships. So this collaboration allows us to develop insurance solutions that both broaden access and strengthen community resilience. So Ricardo, you have touched one of the question of building codes and how regulators and insurers can get involved. And in Morocco, we have worked with the public and private players to introduce a compulsory construction. This is a great example that we have in Morocco. It concerns all risk construction and civil liability. This insurance product protects both owners and builders, reinforcing aspects of compliance, sustainability, and reducing exposure to the risk. So we are also advancing effort to introduce a compulsory insurance for further safeguard households. So to drive effective risk mitigation, we have also prioritized the development of inclusive microinsurance products in partnership with the insurance sector. So another example of a strong multi-stakeholder approach is our agriculture insurance scheme. So the Moroccan government provides subsidies for premiums, and insurers offer innovative, affordable insurance products, risk prevention programs, and farmer training. So this measure all help to strengthen the agriculture sector resilience, and this is one of the most interesting things, this partnership between private and public.
And how is the take-up pretty good? Is it
yeah, actually, yes. We launched a lot of great product now for farmers, and this is the role of the company, the insurance companies, but also as a regulator, we are all the time with them in order to better explain and to better sensitize the agriculture and the small agriculture. So this is important.
No, that's great. It shows that all of us have a responsibility.
Yeah, we have the same vision. And it's important to have the whole stakeholders working on that, having the same vision. So this is one of the challenges that we are facing today, and we are trying to overcome it by working together hand on hand.
Right, and I love it because it actually shows that in insurance we actually can be innovative.
True.
And we could solve some of these unique issues that we're seeing around, and not to supplant traditional indemnity insurance, but use these micro-insurance, parametric insurance products to also give additional tools to help close these protection gaps.
Yeah, that's true. Parametric insurance was one of the most interesting things that we launched in Morocco. So we were working within World Bank, and I saw Danita here in the room, and it was really a great opportunity for Morocco to launch this parametric, especially in agriculture, because for us the agriculture sector is one of the most important in our economy. So that's why for us we are facing drought, and it's quite complicated right now.
Oh, that's fantastic. Should we let these other guys in the conversation or what?
Yeah, sure. I'm happy to have them.
You're doing a great job.
Jeff,
I don't know that we're going to...
Jeff, okay, so how do you think insurer liability risk in response to climate change developments are impacted by recent political, judicial, and litigation environments, and how does this impact collective resilience efforts? It seems like, we need certainty in all this, and that's what we don't have right now.
Thanks for the easy question. And,
so I just wanted to give you just an easy question to start.
Right. Well, first of all, thank you for the invitation to participate at this event. It's really impressive to see this level of sophistication and industry expertise in one room. So really appreciate that opportunity. And on to the simple question. Let's start with just baselining the fact that we're living in a world that is increasingly uncertain and volatile, right? I mean, that's just the baseline that we're up against. And the current environment suggests that the trend that we've been seeing with increased temperatures, wildfires, flooding, and higher frequency of severe events will continue. So in a sense, the higher frequency of these moderate hazards is daylighting the intrinsically higher vulnerability of our built environment with catastrophic outcomes. So with that as a backdrop, it creates an environment that will motivate insureds and uninsureds to look for ways to recoup their losses from increasingly frequent events. And the legal system will find creative ways to look at not just the current environment, but as historical contributions, or what historical contributions have made to this. So having a regulatory environment that supports the enforcement of intended contractual language is really important, right, to help protect the solvency of capital or capacity providers so they can continue to provide resilience to the primary policy holder. And then, more on the uncertainty, on the legal uncertainty, there are 50 different states, and there are 50 different tort regimes. And that's a challenge. That's a big challenge. Right. We also expect, the industry is expecting, substantial defense costs to be incurred by commercial insureds because of this lack of clarity. So, we're also seeing, really large settlements, nuclear settlements in other liability areas. And so the sooner we can get some clarity on when and might there be some convergence on the type and approach to litigation will be very helpful. So, and that's more a U.S. sort of centric thing, but it's a global issue, right? What we're seeing is really a challenge everywhere. And I think it's probably good to talk about a case study, right? Always brings it home. I used to underwrite Florida hurricane risk, and it was amazing to see the market dynamics in the Florida segment over time. And I've underwritten that sector for a very long time, and the liability issues there, the legal fraud that was happening was untenable. The market was basically collapsing on itself. Over a matter of 3 or 4 years, there were over a dozen insolvencies / sort of acquisitions because, the domestic carriers simply could not manage through the cycle of litigation that they were experiencing. So, credit to the state a couple of years ago, they brought in legislation to address the assignment of benefits issues and the litigation. And within 2 years, the Florida marketplace has become stable. New companies are starting. Primary rate for policyholders has stabilized. And it's amazing to see how such a change can happen in a short period of time. So I think it's important to recognize that there is hope and there are ways to address these issues. And that's more a property-centric kind of example
Right.
versus the larger climate liability, but you can draw kind of correlations. And I think for short-term priorities, focusing on tort reform and focusing on just more robust claims handling practices should prove to be really helpful in just addressing some of these big challenges. So that's just a quick example. I will say that, we'll leave it there. I don't want to take up all
So
the
Jeff,
time.
I think the important thing you're saying is we're not helpless here.
Yeah.
There are tools that we can use, that we have, and reforms that we can make. And as we either get mucked up in court or as there's so many different changes and uncertainty, these storms are still coming. These fires are still happening, further exacerbating the need for us to take action. And so I think what you see with us at NAIC is really a cohesion of regulators trying to meet this moment, but also trying to understand what our role is here, of trying to focus more on the pre-disaster mitigation now, trying to protect the consumer before the disaster happens, and fortifying those homes, because we know it works, right?
100%. Sorry.
And how do we lean into that with governments and so forth? Yeah. So Jeff, in that kind of similar vein, what are some of the needs for and gaps in climate risk information to support decision-making for all stakeholders that are what are some of the solutions for this? Because we talk about protection gaps, but there are gaps in information that are critical here. And I guess this could also be for Siham as well, in terms of, I also find it difficult in trying to explain to the consumer the importance of being able to have the right amount of coverage, the gap of information in terms of the severity of these issues and the importance. Just want to get your thoughts in terms of that issue.
I think about it from the starting point, which is the science, right? And we'll talk about NOAA. NOAA's done an amazing job of developing the pure science, the data, for decades. And so it's really important that we continue to have access to that level of data around the world, because the insurance industry needs data to help better understand the primary hazard. And that then feeds into the information sharing and the knowledge building and closing the knowledge gap to close the protection gap. And conversely, as your knowledge decreases, your uncertainty increases, and therefore there's an increased risk load and hence premium as a result of knowing less or having greater uncertainty. So, really continuing to focus on the primary science and understanding what's happening today and what we should expect in the future is even more important now than it was before, because there was a period of time where you could look at the past 30 years of historic experience and think that that's a reasonable proxy for what to expect. Well, as we can see, that's not the case anymore. And a lot of that's driven by, demographic changes, right? People moving to different places, to more exposed areas with higher hazards. So, it's a multi-variable challenge that we've got to overcome. And the data, there's so much of it, right? You think about what's used in the insurance industry to develop those views of risk. There's topographic information, there's land use, vegetation, built environment, there's hazard information, there's speed, strength, path, burn area, smoke, ground motion. You've got building characteristics, you've got claims data, validation data. So that's a lot, right? And there's no one organization or institution or sector that can do that. That's where that's where everybody has to come together in that risk knowledge sharing capacity to really help bring as comprehensive a picture as possible together, because the world is getting more complicated.
Right.
Now, the good thing is that, the technology that we have at our disposal today is so much more sophisticated than it was 20 years ago, 30 years ago. It's amazing to think that, we can now learn so much more and be more informed with the data that we have access to.
Right.
So that's an encouraging sort of thing to focus on. I just want to. I love case studies, so I can share another one. It's a call out to.
Sure, take us back to grad school. Go ahead.
Well, it's a call out to Alabama too, right?
Yeah,
so the DOI there just sponsored a study on fortified homes, and fortified homes are an initiative that came out of the Institute for Insurance Industry for Business and Home Safety, IBHS. And there are over 50,000 fortified homes in Alabama. And so they were able to collect data on the performance in a hurricane of those 50,000 homes and compare it to homes that weren't fortified. And there are material, significant reductions in vulnerability and loss for homes that are fortified. Mm-hmm. That's empirical data that can be used to underwrite and stabilize premium and affordability for homeowners. And that's been done in Alabama. That can be done everywhere. And it's so important because in a world of increasing risk, and as that risk curve, the frequency severity goes up, we can't look to risk transfer to be a one-size-fits-all solution. We need to look at, strengthening, hardening that lower end of the curve, the frequency curve, so that that doesn't become a dollar cost trading exercise and a very expensive premium exercise. Like a stronger built environment, you can then, the financial risk transfer moves up that risk curve, and it plays a very critical role. Mm-hmm. But, it's just understanding the fact that we're living in an elevated profile. So how do you adapt to that? So,
right. No, absolutely right.
But examples of things that are happening now that are working, and the IBHS, the research there for decades has been sponsored by the insurance industry. So, and it's great to see the NAIC and the insurance commissioners working with that data and sharing that data and getting that out. I mean, the fact that there were 50,000 fortified homes, that's amazing, right? That's such a great start. I mean, there's a lot more homes out there that need to be fortified, but it's an example of real, tangible research that's then applied.
Well, now we've reached to a point where we can actually quantify, because we've reached critical mass, right? We got to 55,000 fortified homes. Kudos to Commissioner Fowler. We are all now, subscribing to, the Bible of Commissioner Fowler, and we're all working on putting together our own programs in our individual states, and also to give Commissioner Temple in Louisiana, their audit just came out that clearly demonstrated that their fortified homes were able to see a 22% drop in their insurance cost. And so that clearly now starts to demonstrate real significant savings. Not only are you protecting the home, but you're seeing significant cost savings on somebody's insurance for a fortified home. So I want to bring Daniel into this now, because this is a good dovetail into what we call community-based catastrophe insurance. So these are still not widely adopted in the U.S. Can you talk a little bit about CBCIs and some of the opportunities and some of the challenges presented there with these type of insurance programs? I'm a big fan. We want to see these be able to scale in California, for example, but I wanted to see if you can elaborate more on these type of insurance products.
Sure. And first, for context, I have a bit of an outsider's perspective. I'm in the insurance industry now. I've been at Marsh McLennan for about 5 years. But prior to that, as deputy administrator to FEMA, and then before that, my entire career in emergency management, I saw the value in insurance. I saw the value in transferring those risks off the shoulders of individuals, of governments, federal, state, local governments, reinsuring those risks, and equally important, and I think this is a familiar theme that we've now heard, risk reduction. And so again, in the emergency management industry, we are all in for risk reduction. It has become a priority for emergency managers. But insurance is relatively less understood. Whereas in the insurance industry, we understand insurance, we understand risk transfer, and now we're like, oh, we should also reduce those risks because that's good for all of us. And so pairing insurance stakeholders, including regulators such as yourself, with emergency managers is absolutely critical. And I always remember working with former Commissioner John Huff on convening insurance commissioners at the state level with the state emergency managers. And all too often, that doesn't occur, even today. Okay, so I'll get off my hobby horse. Community-based catastrophe insurance. It's an innovative risk transfer approach. It leverages parametric insurance. And it is insurance that is arranged by a local community or local nonprofit on behalf of those community members. So what does that mean? Well, it means especially for communities where there's a low take-up of insurance. In the US, that happens to be flood insurance, earthquake insurance, very, very low take-up. That community, that local government, that a local nonprofit could arrange an insurance product or other type of risk transfer product, a derivative, for example, to provide some level of financial protection. And if you think this sounds too academic and too theoretical, and it's true, it's not exactly taking off like, no pun intended, wildfire in the US, we have piloted it. We've piloted it, for example, publicly in New York, so New York City, for the last 2 years. Residents of certain areas of New York City have been protected against flood loss as a result of a parametric product that was put in place by a local nonprofit. Now, it's not meant to make that individual whole. It doesn't replace a flood insurance, a traditional flood insurance product, but it provides, on average, about $10,000 in immediate payments following a triggering event. So it's very fast. We all know what parametric is, right? It pays very fast. And that's something that, frankly, the government doesn't do as well, especially the federal government. I saw this time and time again at FEMA. We were there to help people and help governments in their time of need. But often that assistance fell short. It was too slow. And a lot of this criticism of FEMA has come to light in this administration. I personally believe FEMA has a significant role as a backstop to those state and local governments during those truly catastrophic events. FEMA also provides safety net programs, essential safety net programs to individuals who are uninsured. But at the same time, the biggest challenge with placing these CBCIs in local communities is FEMA. And you say, how so? Well, because FEMA, and through its disaster relief fund, provides a strong disincentive for these communities to take action on the risks they face, whether it be risk transfer or risk reduction. Because FEMA will be there, these governments know this, will be there to reimburse them and to support them in an operational sense following a disaster. So why would a community take a proactive action? So unfortunately, that is a strong disincentive and why we don't see the take-up of CBCI or other type of innovative parametric solutions occurring here in the US.
Well, I think that goes for a lot of these products, assuming that government's going to be there to help you. Do you think that's the same case for, say, flood or for earthquake, for example? People assume that government's going to be there to help you after a big earthquake?
I do. I think that's part of it. I also think in the case, again, in the US with flood and earthquake, I think individuals assume that's included in their homeowner's policy. It's not. And all too often, those disaster survivors who are hit by a flood or an earthquake or other non-covered loss, they only learn of it after the loss occurs, and then it becomes FEMA's problem because FEMA provides those safety net programs. Unfortunately, FEMA's safety net programs pale in comparison to insurance. And again,
Right.
a lack of education, lack of understanding, I should say, by Americans on that. And I think an opportunity for all of us to educate our citizens on the need to have comprehensive insurance coverage.
So, Daniel, when you talk about consumers don't know, then a regulator in my head goes, okay, then we're going to force the insurance companies to disclose that it doesn't include in your policy, which is yet another sheet of paper in your policy that nobody's going to read. Do you have any ideas of how we can, educate the consumer in a space where the consumer is willing to absorb this information and understand it? Because it is a big issue, right? Legislatures will pass further disclosure laws that just add to the complexity of a policy that a consumer most likely is not going to understand or read.
Yeah. Well, I certainly agree that agents and brokers are on the front lines of this, and the more we can educate and encourage agents and brokers to help their clients, all the better, right? Because oftentimes, I think we all know this, the individual is relying on that local agent in many cases in these small, like I'm from a small town in Minnesota, right? I know that I rely on my agent to tell me what I need. At the same time, the onus shouldn't fall completely on the insurance industry. Think about the opportunity we have with realtors. Realtors, when you're buying a home, should educate their client on their flood risk. And thanks to First Street Foundation and others, that's more transparent. You can open your app, your real estate app, and see what your flood risk is. But in working, and we've done a lot of work, working with realtors to help them understand why it's in their best interest to explain to their clients that are buying a home that they actually should consider flood insurance, right? Even though it's against the realtor's interest, because the realtor is trying to get their client a house at the monthly payment, right? Anything that adds any dollar to that monthly payment means a smaller house. So it's a bit, it's a bit challenging, but at the same time, what I try to tell realtors, which is the same thing I tell insurance agents, is you have a duty, fiduciary or otherwise, you have a duty to inform your client and to support them. And all of us, whether it be an insurance agent or a realtor, they want to see repeat business and they want to see a happy customer, right? They want them to tell their friends and family. But think about if there were a flood loss following the purchase of that home. How would you feel? I wouldn't be happy with my agent because my agent said, oh, you don't need flood insurance, it's not in a flood zone. BS. Everyone needs flood insurance. And that's what realtors and insurance agents should be explaining to their clients.
You want to try something really interesting next time? When I used to have my insurance town halls, I would bring local realtors and local insurance agents together and help me come up with a solution around the wildfires. And the insurance agents would be, let us raise rates, and the realtors were like, lower rates so that we can sell a home. And we would get nowhere. It was just a firing squad between them. And I would just sit and watch. And it was the most interesting thing to see. And they could never come to any consensus. But again, I lived exactly what you're talking about. Time and time again in every county in California. Siham, as we talk about the diversity and of these different innovative products, we had a panel yesterday on so-called emerging markets and talking about the innovation that exists. And I always think about when we talk about emerging markets and creativity, they have to be creative because they have no choice, right? And so when you have a small market or you are not used to having, folks coming in wanting to do business, you have to be creative, right?
That's
and
true.
So let's talk about another example of this creativity. There are many nature positive insurance products. We talked about parametric, livelihood insurance. What are in your opinion, what is the role of insurance regulators and other stakeholders to promote innovative products that can help communities become more resilient? To me, this is where the exciting part of being a regulator is, and where I get really excited, because I think this is an opportunity for us to rethink our role and to rethink what insurance can really do for the future.
Yeah, so where we don't have a choice, we have to create.
Exactly,
So,
exactly.
Actually, in our authority, we believe that insurance has an important role to play in promoting sustainable development and supporting more resilient societies. So that's why within our market conduct supervision mandate, we work towards supporting the development of innovative and insurance products that serve the larger goal of societal resilience. As a supervisor, our main responsibility is to make sure that the regulatory environment is flexible and enabling, while also making sure that the principles of financial soundness and consumer protection are maintained. So, for instance, in Morocco, we are actively examining how to adapt our regulatory framework to better support the development and implementation of parametric insurance products. And parametric insurance represents a valuable solution, as you said, for climate-exposed sectors such as I said, agriculture, which is a cornerstone of our national economy. So we are also exploring ways in which technology can make insurance more inclusive by enabling greater access for a large part of the population while ensuring their rights are protected, because also it's important, the protection of the policyholders. So we are working to introduce the necessary regulatory changes that will enable the development. It's very important. But most importantly, as a supervisor, we are working to encourage the entire ecosystem, because it's not only the regulator or the consumer or the insurance sector, but it's an ecosystem also with the government to adopt a shared vision and innovation and inclusion in insurance. So we are engaging in several consultations and discussion right now in Morocco with the insurance industry and relevant stakeholders to embark them on the journey of a sustainable insurance. So I would like just to mention here that we are working closely with the industry and the relevant stakeholder to develop products tailored to underserved communities such as women. In this regard, we have just signed a charter with the insurance industry to collect data, because data is very important. So, we are also working with the private and public stakeholders to explore insurance solution for women in rural area. So this is important. So
is it kind of similar to what India was?
Yeah, it's quite similar to India. So we just launched it, and we are trying to find solutions together. So we are the first step. So we signed the charter 2 months ago, and we are looking for the data in order to better address their needs, and specifically in rural area.
Congratulations. We're doing
Thank
something
you.
similar in California with sidewalk vendors and extreme heat as well.
So we are suffering from drought in Morocco, and also earthquake and other catastrophes. So that's why we maybe will address first this kind of catastrophe. And we will really be happy to share and to learn from you, and because cooperation and collaboration between supervisors, and it's very important. It gives us, and from my perspective as an emerging markets, I think that the collaboration is a key for us all to better understand and to better address, because it's not about the emerging market or developed country, it's a whole world. So we are exposed to this, and we have to work closely together in order to find solution.
Especially because protections gap exist in emerging markets or developed markets, doesn't matter. The protection gaps exist.
Yeah,
and
that's true.
You have a strategy that's working to address this specific target population that we also have in our different states and in our country. That's the whole point of IIS, the whole point of our gathering today.
That's true. So, and just to highlight a point, that the emerging markets are less equipped, and they maybe need more help from the developed country.
Correct.
So that's why it's very important to think about this collaboration and effectively collaboration.
Yeah, but we also need you.
Yes,
So, Jeff, I want to move to you. You know, there's significant challenges in securing funding for climate adaptation and mitigation projects, now more than ever. The Climate Policy Initiative estimates that the annual global climate financing needs will reach close to $9 trillion by 2030, while there are sizable investments flowing into mitigation and adaptation plans from both the private and public sectors. I'm curious, how do you think private-public partnerships can meet these funding challenges going forward, and how do you see possible industry funding working into mitigation and resilience industry, working into these efforts? Because I think, the insurance industry has to be part of this funding scheme, funding mechanism, because not only will we all benefit from it, but it's the missing piece to this funding scheme that will be needed for us to all succeed, because ultimately an uninsurable world doesn't benefit any of us.
No, 100%. And it's a great question. So, the industry has been actively engaging in this space for quite some time through a variety of public-private partnerships, alliances, coalitions, and forums. There's one called the Insurance Development Forum. Akosaway, the Secretary General, was presenting yesterday on that topic, and RenaissanceRe has been part of that effort for 10 years now, and it's great to see the progress that's coming there. I mean, it's an incredibly complicated process. It's a partnership between the insurance industry, the World Bank, the UNDP, sovereign donors, right, from the G20, and then the demand side from the V20, the vulnerable 20 most vulnerable countries in the world. I mean, that wasn't ever happening before. So just having that dialogue is really important, but it moves beyond dialogue. It moves to action. Like, what are we actually doing to make a difference? And there are specific things that we can point to. I mean, I work on a risk modeling steering group that's really focused on lowering the barrier to entry to help risk owners in emerging economies better understand their risk by leveraging the insurance industry expertise that's being shared through open source modeling platforms like Oasis. So we've been actively promoting and funding the continued development of Oasis. I mean, for-profit, private risk modeling platforms cost millions of dollars a year in licensing fees. Oasis is free, right? And so we're trying to lower these barriers so that, there can be a broader understanding of the risk, because you have to start with that, because you can leverage that risk knowledge to make more informed decisions about how best to handle a risk, right? Is it risk transfer? Is it mitigation? Well, you need to have the full picture to be able to start making more informed, intelligent decisions and how best to allocate capital to do that. So, another great example that's come out of the Insurance Development Forum is the Infrastructure Fund. It was just recently announced, and that's being run by BlackRock. And it was targeting, lower ticket infrastructure projects that were typically not getting the capital they needed because they were just deemed too small, right? If it's not, 200 plus million, you just can't get the traction. So how do you bring capital to those projects? Well, so the infrastructure fund was really built for insurance asset balance sheets, where they could align those assets with those infrastructure opportunities. Right. And that's actually getting a lot of positive traction. So that's a specific example where something's been done to make a difference. The industry's been promoting the IBHS, funding the IBHS for decades now. And the research that's coming out of that is incredible, right? Look at the work that's been done for wildfire. Right. And how wildfire resilience in home reconstruction, you can basically spend the same amount and you can have a wildfire resilient home. It's amazing that, the work is being done. It just now needs to be implemented, right? Through better building codes, through better zoning. Because if we just do the same thing over and over again, we shouldn't expect a different outcome. We need to change what we're doing, right? And that's where the education piece comes in. And, all of this it's happening. We just need to do more. We need to scale it up and get more engaged. So, I don't want to.
I want to take one of the Slido questions because I think it's really important and one that's really on all of our minds. And it's a great question. And maybe, Daniel, if you can help me answer it. How will the industry, regulators, and policymakers make up for the loss of NOAA hurricane data? Will this cause rates to go up? It's really a concern that we all have. And this is a real critical data set that we might not have access to anymore. And that will put people in peril. Just want to get your thoughts on that.
Yeah, we have real concerns at our company about this. We rely on this, particularly Guy Carpenter, our reinsurance broker, is very dependent on that data. We've made our concerns known through the trade organizations. I know Reinsurance Association of America is leading kind of the charge on this with policymakers, and we fully support their efforts. I think a key question here in the U.S. is what is the potential cuts to NOAA as well as the cuts to FEMA mean for this hurricane season?
Right.
That's definitely of concern both to our company and to me personally. I would say simply that I hope that we'll get to a point where FEMA reforms take hold. I think that the president having a FEMA review council, outside experts looking at FEMA, that's a step in the right direction. Unfortunately, that's not going to do anything to prepare FEMA for this hurricane season, right? So if you hear anything about FEMA reforms, and many of us former FEMA folks are pro-reform, but not pro-eliminate, obviously, FEMA. And those reforms are meant to be considered and take hold, again, over the next 6 to 12 months. As far as this hurricane season goes, I think anybody who knows anything about NOAA and FEMA knows that we should be concerned that these cuts are taking place right on the cusp of hurricane season.
And I know for us at NAIC and through our Guerrilla Committee, we are also making our concerns known to the administration. I know we have 4 minutes, and I quickly want to have you just answer this one last question. I want to kind of be forward-shadowing, and we'll start with Siham. What predictions do you have on what the risk resilience landscape will look like in the next 5 to 10 years, Siham? I know it might be a tough question to try to pontificate, but what do you think?
So I'm not sure that I'm good in prediction. But I think that we all know that maybe resilience and protection gap will remain a critical challenges. So in 5 to 10 years, we will witness a huge advancement in data analytics, geospatial technology, and sophisticated risk modeling that will enhance our ability to identify and quantify resilience and protection gaps. So the insurance industry will hold a key role, and the question of risk insurability will become increasingly urgent. So demanding innovative solutions to address these challenges, this challenge specifically, I think that insurers must expand access to tailored products such as microinsurance and parametric insurance, offering timely, affordable, and transparent coverage to underserved communities and small communities. It is imperative that supervisors and insurers work hand in hand to develop regulatory framework. This is really important, and that not only encourage these innovations, but also safeguard consumer protection and uphold market integrity.
That's fantastic. I love that. Daniel, what do you think?
Well, we talked a little bit about what realtors can do, or the real estate industry plays a role in addition to our industry. I think the broader finance industry has a role to play here. Specifically, if you look at lenders, if a lender is making a loan on a property, they are going to be on the hook, potentially, if that owner walks away from it. And so those lenders should care about how resilient that structure is. And if they do care, I would say they should incentivize that building owner or that developer to build resiliently. And in the same way that we think about this from the insurance standpoint, it's very intuitive, right, to talk about, well, there should be a discount to your insurance if the home is less likely or the structure is less likely to sustain a loss. But I don't know why we don't think about that the same way from a lender standpoint.
I always say it's all fun and games until the banks stop giving out loans. Then we'll see if people start paying attention. Jeff, what do you think?
Well, I'm not good at crystal ball gazing either, but I can talk about what I would love to see.
Perfect. I'll take that.
Which is building on all of the work that's been done to date, right? So more data, more science, more understanding, more risk sharing, more risk knowledge transfer, and more global engagement, right? I mean, I think I'll do a plug for the Bermuda market. I think to the tragic events in California this spring, right? I mean, the size of the economic and insured losses are just absolutely tragic. Bermuda provided 30% of the recoveries in that event, right? it's a global solution. We've got global problems, we need global solutions, and diversifying losses lowers costs for primary consumers. And that's a very important message to continue to share, right? That's how we actually make rates more affordable for the individual. And to continue to work globally on these issues, right? In alliances, coalitions, and forums to continue to push. It's like we're going to be running to stand still, but we have to do it. So
Absolutely.
I hope we continue that effort and continue the collaboration with the industry and the regulatory and the government, right, across the board. So
Thank you. Thank you. I really appreciate your time and this morning. Let's give them a round of applause, and we appreciate your time.